Hi there, welcome to Wyckoff Cardano technical analysis session. So last week we talked about there is about a month time for Cardano to break out. So if you're new to this session, where is it heading and how close are we to the breakout? Let's find out now. Here we're seeing the weekly chart of Cardano. Currently, it's still trading under the key level, yellow key level, 0.95, and you already see this triangle over here, right? So that's the almost like I can say the deadline for breakout to happen. So this is around the first week of October, where the price is getting nearer and nearer to this triangle right there. That's the triangle we're talking about. And the price currently is still trading within this narrow range between the bottom edge of the upward channel and this yellow key level. So last week it tried to break above the yellow key level but got rejected back down to somewhere near the middle where the price got pushed up in this week's candle. Now it has passed that point, that's center point, and currently staying somewhere at this intermediate level. You see these two red candles, basically the tail and their heads are lying at the same level as the current weekly candle. So is the price going to break out towards the upside? Like basically this is an ascending triangle, right, according to candlestick pattern analysis. But last week in one of the sessions I already mentioned, do not always blindly follow the textbook theories, because sometimes it just doesn't happen that way. So the key is, in terms of Wyckoff stage, I'm still keeping these percentages, so the probability of an upwards appearing is still lower than the price coming down for another sign of weakness, even though it seems like it's continuing still within the upward channel. We'll see when it eventually breaks out whether it's going to break above this yellow key level, or is it going to break outside of this upward channel and eventually come down to the sign of weakness. Because if it breaks out, obviously it's celebration time for the bulls, where they will hope to see the price challenging the green key level, and that's where the possibility of getting to an upthrust getting higher. However, the current situation is, if this week's candle getting like suppressed at the current price level around 0.91, this is like a skewed head and shoulder. So that's another way to look at the current situation. So it's not entirely optimistic, not totally bullish. So just take note of that one. And also the Bollinger Band Keltner squeeze. Previously the squeeze happened and we only had a little price climb. So if the support or like people are willing to FOMO in for Cardano, that shouldn't be just that little scale of price surge. It should be of a larger scale. But anyway, again, it's being trapped under this yellow key level for now. In roughly 2 weeks time, a lot of times the breakout will happen before the this crosses or these triangles. So before it gets to the tip, the breakout event would have happened. So we are getting very close. This week's candle only have 3 days and 24 hours left. Yeah, still a bit more than half a week, but then when we move into next week, the clock is counting down quicker and quicker. There's just so little time left. And then in terms of volume, after the mid-August high volume where it tried to challenge the yellow key level but ended up returning to the current level between the orange and the yellow, the volume has declined quite significantly. So it almost basically less than a quarter right now compared to the volume back then. So it's not a supportive sign, I would say, for bullish action as of this moment. So let's take a look at the daily as well. We already talked about this triangle happening around October 10th. So this we've got a more exact date over here. So somewhere between now and then, that's roughly around 3 weeks, this breakout will happen. Previously I've put in this tag. I'll still keep the question mark over here because we still haven't been able to see which side this is going. So if it follows what happens back in late August, so it started from mid-August where the price climbed to the up thrust and then come down for the AR2, the automatic reaction 2, and then last point of supply, and then eventually to the sign of weakness. Currently, if it repeats what happened back then, we've got this peak and then another mini peak, and then eventually comes down to the sign of weakness. So you see this somewhat similar to the McDonald's logo, or yeah, basically the brand, the double McDonald's over there. Actually there's a triple if I draw one more towards the buying climax. So let's see whether that's going to happen the same way. It's just one of the ways it can happen if it really breaks outside of the upward channel. So this upward channel box that started back in end of May, up till now it's already 111 days, so not too bad of a stretch in terms of an upward trend. So these percentages, again, keep them there while there's a chance, and it seems like it's following an ascending triangle, but then it's not very positive. We don't have sufficient support in terms of volume, so this will remain at a lower chance, and this is going to stay at a higher chance when it breaks out from here. What next then is, if this is really the end where we've got the up thrust as the final leg upwards, then eventually after the sign of weakness there may be chances of last point of supply at a lower level, and eventually the price would come back probably within the long-term playground zone, this white box over here, and begin another round of accumulation. So it can be at a higher level accumulating, much like what happened back in June to mid-June to July, or it can be at a lower level similar to what happened back in summer in 2024 all the way to November. So currently it's too early to tell, but then yeah, it's only a little bit higher than 50% chance. So the importance is, you know what I'm going to say, always remember your stop loss. See you in the next session. Hey, my price target, hi little prankster, that's something I don't do, so I won't be able to give you a number because guessing the top and guessing the bottom just isn't my practice. So what I do is I usually just set a stop loss and ride a wave, keep pushing your stop loss until a price retracement happens, then you'll be forced to take profit. That's my way of doing things. So I won't guess where the top is and then like re-enter even if like I've got push to take profit. Let's say a very good example is if I say the price is going to get to $1.4. So are you going to get in right now? You probably would be like basically our range would be anchored towards that point and think, oh, it's probably a good time to get in. But that's probably not the case. The better scenario is to assess like volumes and then Wyckoff stage plus the channel box and also candlestick patterns. So that's my way of doing it. A lot of people have been asking me the same question, but I'm giving the same answer because that's the way I trade. Yeah, so thanks for your question. See you in the next session.